Hi, this is Lee DeLorenzo, President of United Asset Strategies. I'm here today joined by Tom Healy and Matt DeLorenzo. Tom will speak to us today regarding policy, regulations, and economics. Matt will share with us his insight on fixed income. And as you know, we talk about the last quarter and where we think we're going each quarter with you. And today we're going to change it up a little bit and go with an interview style. But before we get started, I just want to talk about the enjoyable, broad-based rally that we had last quarter. Whether you were invested in large cap companies, small cap, international, domestic bonds, you really enjoyed a nice rally. In particular, in the sector of gold, we were up 9%, gold was up 9% for the quarter alone. And most of United Asset Strategies models have exposure to gold, and our actively managed core positions increased during the first quarter. So we were well positioned to take advantage of that rally. So Tom, I'd like for you to share a little bit about the economic backdrop and what part that's played.
Sure, thanks Lee. I would characterize the economic backdrop as mixed but weakening. The reason for that is if you look at the different data that we track, most of it is coming off multi-year highs. For example, US PMI, which is the Purchasing Managers Index, that was in the expansionary level for the last few years. More recently has fallen more into neutral. If you go beyond the US, particularly in the Eurozone, those PMI numbers are actually in the contractionary stage. Industrial production is weakening. And so when you look at the entire backdrop, US GDP growth this year is expected to decline versus last year. And as we look out to 2020, decelerate further. But it's not all negative, because if you look at things like the consumer, they've been very resilient, and also the unemployment or employment data has also been fairly strong.
So that is a bit of a mixed message. So there's got to be some ray of light in there that helped that market rally for the last quarter. So I bet it's in the Federal Reserve. Matt, could you talk a little bit about what part the Federal Reserve has played, and interest rate, a little bit of forecasting there?
Sure, I think that's right. I think the Fed has had a lot to do with the rally we saw in the second quarter, and really the whole year in general. And if you compare where we were in December when the market was coming down, the Fed had hiked interest rates, and there were some concerns that they may over-tighten, that was going to harm the economy and companies' borrowing costs. So really throughout the whole year, we've seen a complete shift in expectations for the Fed. So we went from a concern of rates being too high, the Fed continuing with quantitative tightening, to now we're at the point where the market is really forecasting up to 3 interest rate cuts for this year. So pretty much that alone has been enough to boost confidence in stocks and help this rally along.
Could you also comment on inflation and the way that goes into the Federal Reserve's thinking?
Sure. So recent inflation readings have been a little bit sluggish, and that actually supports the case for the Fed to remain accommodative. So it supports the case for them to cut rates to really keep inflation, give it a chance to rise.
So there was a bit of changes going on in the second quarter in the Federal Reserve's outlook and actions, or intended. Were there any strategy changes at United that you made?
So given what's been going on with the Fed and the market's anticipation of future interest rate cuts, what we've seen is that credit spreads have really tightened and interest rates have remained very low. So we've taken the opportunity in the quarter to take profits, mostly in longer-term bonds and preferred stocks.
Thank you. Were there any additions to any other sector?
Sure. One of the sectors that we think is a beneficiary of easy Fed policy, but is actually still attractively valued, is emerging market bonds. So we've added in that category as well.
All right. So as it turns to the next quarter, we want to talk about maybe policy and regulations. Are there any shifts that you're anticipating in that area?
Sure. Well, obviously policy is front and center of investors' minds, Fed policy first and foremost, but trade policy is also really important. Our long-standing base case on the U.S.-China trade deal is that they will get a resolution to the deal. The key is timing. So as we look out at it, we think that the deal will be resolved as close as possible to the 2020 election so as to maximize the political benefit for the administration. Speaking of the election, that's another policy type issue. We're tracking it closely now that the Democratic debates are in full swing. A couple of the common themes that came out of the debates were increase in taxes and an increase in regulations across certain sectors. So we're going to be watching and tracking the indicators we watch very closely as to what we think the election outcome will be, because elections have implications for investments, and to make sure we're taking proactive steps to protect portfolios and position them for an evolving political landscape.
So at United, we've been working very hard over the years to dampen volatility whenever possible. And I would like to just close the technical part of this presentation by saying that over the coming 2 months, as we move towards the October 1st fiscal budget start for this country, we're likely to see increased volatility as the debt ceiling might be reached, maybe even while Congress is on vacation. That's sure to get a lot of talk on the radio and the news and increased volatility. So we'll be watching that. We do always want to know, is this something that's to be long-lasting or something that's going to be shorter in duration? Either way, you'll know that we'll be working on trying to wring out the volatility and the noise inside of your portfolios. So that concludes the technical portion of our presentation. I'd just like to talk a little bit about what's going on at United starting next week. Next week, we are involved in something called Shoot Out for Soldiers. And Shoot Out for Soldiers is basically a fundraiser that's run here on Long Island that United's participating in. We've got at least half of the staff volunteering from the hours of 5 to midnight for 24 hours. A bunch of folks, including veterans, actively serving, and volunteers like a team that we put together with children of our employees to play lacrosse. Our employees will be serving food and vendors and running pennies around and actually trying to raise some cash as well. So if you would like to participate and help out a good cause, the money's going in 2 directions. One piece goes towards some Air Force programs where children of Gold Star families, as well as actively serving military, that their children could get some grants towards college and aerodynamics and help out the Air Force. The other half goes towards some sort of respite programs for vets that might be suffering from PTSD. So again, that's July 18th. Please go to United Assets Facebook page if you'd like to learn more and maybe to contribute as well. Lastly, before the end of the year, we're hoping to run a seminar right here at our new location, which is going to have a featured speaker on college planning, college prep, and then we'll add the financial planning aspects as well. He's a noted speaker, he's an author. I'm going to keep his name quiet until he's signed off on something, but we'll be inviting grandparents and parents and even kids themselves, maybe the 8th, 9th, and 10th grade that are interested and concerned about that whole college planning process to make sure that they maximize the benefits that are available. So that's it. We want to thank you for joining us today. We'll see you next quarter.